If you want to learn more about a firm that is shaking up the traditional boundaries and barriers to participate in securities lending, then this is the video cast for you. Hello, and welcome to Season 3, Episode 6 of Pierpoint Perspectives, the Art of Securities Finance. I'm your host, Roy Zimmerhansl, and practice lead at Pierpoint. This season is really focused on technology providers that are having an impact today and shaping the securities lending business of tomorrow. Today's guest is Boaz Yaari, the founder and CEO at Sharegain, a self-described capital markets infrastructure fintech. I invited Boaz onto the show after their recent announcement of a successful Series B fundraising in order to understand what Sharegain's ambitions are, but also to get more clarity as to what their existing service offering is. I regularly get asked questions about Sharegain, so I thought, why not just go to the source to get that better understanding? In addition, I want to get some insights into what it's like to raise money in today's market for a disruptor. $64 million is a lot of money. So I'm intrigued as to what they plan on doing with that money. And let's see what we can convince Boaz to reveal today. Before we go to the interview, I want to declare that I am pretty pumped up about this chat. I love change. And for me, the business structure of securities lending has really been pretty stagnant for some time. To my mind, the last really fundamental infrastructure change to the participant sort of structure of the business was when ESEC lending was founded. And, they had a non-custody model, which in itself wasn't new, but their focus on exclusives and portfolio auction was a real innovation. So let's see about Sharegain. I hope you're as excited as I am. And so without any further ado, I'd like to say hello and welcome to my guest, Boaz. Welcome. Listen, let me start with saying congratulations on the Series B funding. So well done. I think the thing that I find always amazing is that seems like a really simple announcement. Series B funding sorted out, it's finished, off you go. But there's something that makes me think that there's a little bit more to that. Maybe you can take us through some of the time and effort and process and what does it actually mean? Because we read about the Series B or Series C funding, but I'm not certain everyone has a real sense of what that really means. Maybe you can start with that.
Yeah, listen, it's funny that you say that. Before Sharegain, I used to being Israeli by origin. It's like you read about tech and tech entrepreneurs and funding rounds. And it always seems pretty easy. And then you really get into the details. And actually you understand that it's much harder than you think. And there's statistics, right? Everything has statistics, right? Every round takes between 4 to 6 months, and there's in terms of valuations and different metrics and so on, everything has statistics. And you always think, especially early on as an entrepreneur, especially first time entrepreneur, you always think that you're going to beat the statistics, but the statistics are there for a reason. Law of large numbers. So I have found that almost always I was bang on the statistics in terms of time and effort. And so once you embrace that, you say, okay, so how do I optimize and how do I build something? It's almost like a military operation, right? How do you execute an investment round? And for us, really thinking about going into this Series B, which represents, other than the letter B, it represents the movement from product market fit, if you want to call it, to here we scale, here we go and start scaling the business, was all about planning. And for us, given the quantum of dollars that we wanted to raise, it was all about, we need to find the right partners to grow with, and we need to find the right partners that understand the vision, that understand capital markets, that understand that this is what you call, especially securities lending, right? Needs to be very patient capital. Things take time, a lot of time. And so we started back in March, April 2021, understanding who we want to approach, different funds, moving from what we call VC to growth equity funds, different funds. There are funds that do everything, right? From seed to IPOs, but most funds have very distinct playgrounds. Some are in the pre-seed and seed, some are doing the A and B, some are doing the later stage, some growth, some venture, some generalists doing everything. Some are very fintech focused. And so it took us some time mapping the market, understanding what we want, and then approaching all of them ahead of the curve. Just getting introductions. You and I believe in actually never going and asking for something something from someone on the first date, right? You need to know the person, and I'm a people's person, so I want to know the people. And there's a trust building process, right? You talk to the people first time, and then to some of the potential investors, not asking for anything, just presenting it. If they like it, you stay in touch and you keep them updated in a couple of months, and every couple of months you keep them updated. The goods and the bads, and how you dealt with them. And so when you want to hit the button and start really going on a road show, then they're not coming cold, right? Everything is new. It's not new to them. And they've gained, and the ones that want to participate, you already gained their trust. So now it's talk about really getting into the nitty gritty of the details, which is key in my mind. And then this year was all about planning, right? Because we wanted to partner with a US based fund, but don't forget that US was closed, foreigners, right? And I said, no more Zooms, right? You want to meet face to face because you need to get the energy, you need to get the vibe of it. And I think that partnership and investments in venture capital funds is a lot to do with trust. You need to look at the other person's eyes, the CEO or the founder, and say, I believe in what they do. I believe that they can execute on their plans, even if they. So it's all about believing, and I think face to face is the best way to do it. So we planned, but we didn't know when US opened. So we needed to plan ahead, getting the data room ready, like tons of documents, getting the pitch, the investment decks, the financial plans, the whole thing. There's so much to do. So we create a team, and that team runs in silos and actually prepares for an investment round, and that's months. And
Yeah, and
once we
when you
yeah,
talk about months, if I can just interrupt that, when you talk about months, we aren't just talking about a lapsed time. That is literally like a full time focus, right? This is what your job is, to create whatever aspect of the pitch that you are doing, right?
I assembled what we call a deal team internally, and we worked on that continuously, which it started with 50% of your time and ended up to 150% of your time. So it was literally, but it ramped up through the stages. But then, and it went 100% of our time from when we started, from when we went to the US. So we were in the US. We officially launched the roadshow on the 13th of November. And then running it very tight. And think about it. I always say luck has a lot to do in life, but then luck and preparation is the key, right? So
Yeah.
the US opened on the 8th of November, and we said, we're there. And everybody told us, wait until post Thanksgiving, because people are just coming back to the offices. Wait, I said, no, we're going. So we were there on the 13th, right? On the 8th US Open, we were there on the 13th, a whole week. Beautiful day, but beautiful week in New York, by the way. New York and the peripheries, East Coast. And everybody wanted to meet us because everybody was in the office. Finally, US opens up. Everything was face to face. A week after was a short week, Thanksgiving, and then Omicron, and went fully blown, and the US closed down. And not just in terms of foreigners going, but most companies were told no more outside meetings. So we effectively had a window of 2.5 weeks. And within those 12 business days, we took. And I always say, people say, oh, you're so lucky. Luck has nothing to do with it. We planned. We said the minute the US opens, we're there. We got everything ready. We got everything planned. A few days afterwards, we went there. And since then, we
Well,
ran it. We have experience on doing these things. So we ran it very tight.
yeah, and what's the phrase? The harder I prepare, the luckier I seem to be, right?
Yeah. If you work hard
So
enough, you give.
I like that one. I haven't heard that one before, but I like that. I like that. It is about the effort and the preparation, the planning, and but also having the execution plan. So I guess if we go back to when you started in April, what was your vision? Like, why seek outside funding? Like, where were you going to go with it? What did you want the money for? And so, where are you going with it?
I always say there's a great book that I highly recommend for everybody to read. It's about the I think one of the greatest Israeli statesmen, Shimon Peres, and that book and it's like an autobiography that literally was concluded days or weeks before his passing. And you read that book and about how big were the dreams, and that goes is the book's name is No Room for Small Dreams. And with Sharegain, we never had like we always have big dreams, right? Securities lending is just the beginning from our point of view. But if you think about beyond securities lending, there's so much to do in capital market. There's so much to do in securities finance. And what we think about it as conceptually as we think about it, there's so many adjacencies to what we do and what we've built. And so we really look for partners that understand that and buy into the two big trends. One is private investor participation in capital markets, which in my mind is probably the biggest trend in capital markets. It's cross-generational, I think. And the more private investors become smarter and savvier, the more that they demand what we call a level playing field. So they look at their life and say, why does BlackRock can do repo? Why can they squeeze the orange harder? Why can they do securities lending? I want the same thing. Why can they take what you call margin lending or securitize lending, whereas I cannot, right? And if you think about it, it's all featureable. It's all featureable. It needs to be thought of, and there's a lot of regulatory constraints, but it's all featureable, right? If I would have asked you, can you open an account, a cross-border FX account globally in a bank within 1 or 2 minutes, 20 years ago, you would say you're mad. And today it's like a couple of clicks of a button, right? You need a driving license and a credit card, and that's it, you're done. And in my mind, this is like securities finance is just one thing, but it's just one layer, right? And we're seeing capital markets disrupted and new models coming in from the what you call I call it broker dealer in a box, right? You have broker dealer APIs, you've got Drive Wealth, Alpaca, Apex Clearing, all of these embed, all of these companies that really gives you, as a broker, give you the ability to trade, right? You don't need to open a broker dealer in the US. You don't need to, they'll do all the heavy lifting, trading, fractional shares and the likes. And that's classic B2B outsourcing, right? We'll do that for you. You bring the clients, we will be the back engine that does all the thing for you. We want to be the securities finance, right? The marketplace for all securities, what we call not security, asset-based lending, securitized asset-based lending, whether it's securities lending, whether it's repo, whether it's margin lending, we want to be that place, right?
Yeah, and look, I think you've hit on a couple of things there, which I want to explore. Number one, I couldn't agree more with the idea that retail participation is 100% the most important trend. So it's already penetrated well in the US. But if you do absent there is the rest of the world there. And obviously there's countries with different degrees of retail participation, but it just isn't as widely based. And one of the things that I want to ask about, though, you just talked about that B2B approach. It seems that all of the innovation has been at that kind of servicing that retail community, obviously because of it's a trend. But on the institutional side, the banking and the private banking and the large asset manager side, we seem to still be in the same place we were 10 years ago, 20 years ago. Why do you agree that sort of innovation has been more retail oriented than institutional? And if so, why do you think that is?
I couple of stuff. I think like in terms of wealth management as a whole, I think that the entire sector is the whole what I call wealth management, which gets inside what we call the neo brokers or the retail facing brokers, the private banks, the advisors. I think the whole thing is moving, and it started moving very fast. I think big financial institutions understand that. You've seen UBS buying Drive Wealth, which has been the biggest in terms of what we call robo-advisor. You're seeing JP Morgan, but not JP Morgan opening a wealth digital bank. First time ever, Chase is opening a digital bank outside of the US. It's opening in the UK. And I don't know their plans, but I don't think that they're going to stop with just a retail bank and a credit card. I think they have grand aspirations in terms of they want to plug in wealth management on top of that, and then want to put in on top of the wealth, create a proper, like a wholesome solution. And the nimbleness of the retail online brokers and their ability to move fast they've become the avant-garde, right? Trailblazing. But I think we're seeing Sharegain, we're seeing big banks coming into play, big wealth managers, big private banks coming to do securities lending and want to do it powered by Sharegain, first time ever. Like they've never done it before, and now they're going. And what has changed? The entire environment has changed, right? Clients want it, firstly. Secondly, you need to generate that additional income because fees are going into zero. And thirdly, there's a macro environment has changed as well. You're done with the 10 to 12 years of QE and very low rates. And we're starting to see rates starting ever so slowly, but starting to normalize. So money starts to get priced in. The money starts has a price, and when money has a price, volatility goes up, valuation becomes more thing, and then you need something like a stable recurring revenue, and that's why securities lending, for instance, comes into the forefront. Otherwise, how you sustain your business?
And so that's really the drawback. Yeah, I agree. Interest rate changes to me is what changes everything, right? Because you start getting differentiation, you start getting different trading. As you say, there's value to money. It becomes the new benchmark. When everything's at zero or slightly negative or marginally positive, there is nothing. It is just the market. So you really just after beta because all the money's in the market. Now there's an opportunity for differentiation. So what kind of opportunities or structures or products, like what is this money going to allow you to do?
Firstly, we're going to grow quite substantially in terms of team, growing R&D, marketing, sales, obviously expanding into the US, key thing for us. So building the entire Sharegain US business, which currently we have a very small presentation in the US, but Sharegain US is going to grow substantially in the next year or so. And secondly, going into different or launching on new products that are adjacent and fit into our vision of where we want to be. And thirdly, we're working with Sharegain is not your classic fintech, right? It's a capital markets fintech. Most fintechs start with, I call it, and no disrespect to anyone, they start with the small fintechs and the small clients. I call it the small fish in the pond, hoping to get the big fish in the pond, which is the big banks. But most fintechs never get adopted by big banks because at the end of the day, you're either a competitor or they don't really need you unless you create real true value. And Sharegain has been adopted by a few banks. And so for us now what we see is that the banks wants to see that we're here to stay and we're here to stay for a long time. So having a strong balance sheet and a strong partner gives them that comfort that they, as they look 10 years ahead and not a year ahead, that they have a partner to grow with and not just a UK based fintech that is still loss making.
Yeah, and I think that having been at a large bank looking to acquire technology, I can tell you that it is, in terms of the bank's consideration, it is almost never about can the product do what you say it does? It's about is the bank going to actually take a leap of faith with that service provider? And so I very much understand that point.
Sorry, I just want to add one thing. I tell my team one thing because you've hit the nail on the head, right? We always knew that we have an enterprise grade, but when you go to banks, and this is what it took us some time to understand, but now we have it amazingly, is that but in order to really work with what you call enterprise, you need an enterprise grade team. And an enterprise grade team means so much in terms of you need to understand how it works. And as you said, it's not just about the technology it works, but dealing with numerous stakeholders and understanding how you get this thing over the line and getting all this is where really differentiate different fintechs, right? And the ability to really get adopted and collaborate with big banks. Do you have an enterprise grade team that understands and can deliver these big projects? And that is key in my mind.
Yeah. So before I talk a little bit more about, or ask you to talk a little bit more about your wider vision, I think it might be helpful to viewers to actually do a bit of a recap about what your product is right now, because you talk about being a fintech in the capital markets, but if I look at what my definition of a fintech is, you're more than that. So maybe just give us a bit of a recap as to what do you do today.
Yeah, so Sharegain is a UK Israeli, what I call capital markets fintech firm of currently about 52 people, offices in Israel, which is our R&D center, offices in the UK, offices in the US, and as I said, we're growing. We have two products or two offerings. One is what we call SLAS, Securities Lending as a Service, and that is effectively enabling financial institutions to almost on a plug and play be able to offer a fully paid for lending program for them and or for their clients. And maybe if we drill down we distill it a bit further, I think that what Sharegain brings to the table versus no other vendor or agent in the market is that we understood one thing. We understood that, or we thought that the biggest new market is wealth management and not just another asset manager or another pension fund. And then when we looked at the market, we said, the existing incumbents are not equipped technologically to deal with wealth management, right? They deal with you on an omnibus account. They don't, but at the end of the day, wealth managers are not the owners of the assets. They're the holders of the assets. They're the custodians. And so effectively, their clients are you and I, Roy, and millions of others. And so if they want to do securities lending, they need a big technological infrastructure that enables them to take those millions of underlying clients and aggregate them and then create these processes that, that we all know too well from securities lending. And the issue is that it's a very expensive project. And that project is very siloed. You do that, you almost can replicate it to anything else in the business. And so it always gets at the bottom of the pile. And what Sharegain thought about it, if we can create not as software as a service, not as SaaS, but as a business as a service. If you're a wealth manager, an online broker, or a private bank, and you want to do securities lending, not only will we do securities lending for you, which is the outward, being your securities lending agent, and think about that's outward looking, dealing with the Boaz, with the prime brokers, and doing the day-to-day life cycle management. That's almost by, and that's other people in the market can do. But if we do that for you, which is the outward, and then the inward as well, we give you the entire product that sits like an overlay on your existing stack that enables you then to roll out a securities lending program. And not just books and cycles, everything from digital onboarding to client experience, the whole thing. Then for the first time, you have a fully end-to-end solution, right? From Roy, the retail client, all the way to Boaz, the trader at the prime broker, the tier one prime broker. Everything is on the Sharegain platform, right? And then we enable you to go live almost, call it 4 to 6 months, depending on the project. And then with no CapEx, almost no OpEx, no fixed fees, no management fees, no onboarding fees. We take a portion of the lending revenues. And so we are by design incentivized to optimize your return. If you don't lend, we don't get paid. And I think there's a huge alignment of interest here. And also we're so confident in our product that we give you the 90 days, right? We don't do 3-year product. We don't do 3-year projects. You don't like it, 90 days, go turn it off. But what you see is that actually people love it, right? Because it gives you the whole thing and you can learn as to go. And we have a great team that does also the tweaks and rolls out features continuously for the benefit of our, what you call, community. So effectively, then you think to yourself, actually, Sharegain does a great work. And I didn't need to do like a 2-3 year project in something that I never knew. And I don't need to commit, I don't know, $15 to $20 million to do it. So that's our main product.
That part of the business, I think you've hit on the key issue. I remember having a conversation a couple of years ago with a broker who was going to mobilize their assets, and they were all focused on the agent lender that they were going to use, who was their custodian. And we talked about it, and I went, look, that's great. And that looks like it's really interesting. But actually what you talk about is I can't remember whether they called it inward or outward, but basically from the agent lender to the market, to the prime brokers and the end users. I went, that's the easy bit. So they can do that. But how are you going to deal with allocating transactions to customers and fees and corporate actions and decisions and all of those sorts of, all of that? The way you've got it set up is you're going to be doing that. How are you going to do that? And they went, oh yeah, we hadn't thought about that. And they were literally months into their project. And it is the issue of the cost of doing it, the time commitment, the cost and the implementation. So I think if that retail trend or that private investor or that high net worth investor, private bank, the wealth management community, if that is going to continue to grow, as you say, they're going to demand that kind of product offering from their service providers or the change service providers. So it becomes much more of an imperative. So I get that. So that's one of the products. And you say that's right now. Did you say that was currently your main product or your core product, or how did you describe it?
Yeah. And another thing that we have, which is a subset of that, or I like to call enhanced subset of that, is what we call SL Tech, which is effectively what has been publicly announced, our collaboration with Citibank, which is effectively an existing agent, an existing custodian that has a securities lending agency business that actually says, okay, I have a lot of wealth management clients, not just specifically the Roys, but wealth managers, the custody with me, but I don't have a solution for them, right? Because I'm faced with the exact same problem, that how do you service the technology that they need to build internally? And so for those that want to deal with the wealth management, we give a subset, we connect them. So we just, not just, but we give the technology. It's more of a SaaS product whereby the existing securities lending desk or agency does the whole thing. It's their clients, their marketing, their sales, their trading. We give the technology, and that's a joint collaboration that works well.
So I'd like it. So that's the straightforward. This is your enabler. If you want to do everything, and the thing that you're missing is the technology and the full sort of end to end kind of thing. Here's the technology that allows you to do that. Go do your business, and you're effectively a software provider.
Yeah.
So that's, and then you've got the next step up. I would look at it. The next step up would be, in fact, if you want, we can do everything. You don't need to actually do anything. We'll do the full product, which is what you're saying is the main course. So if those two pieces are, so the main business, what else is it that you do then?
That's it for now. It's quite
That's
a
it.
lot.
Okay.
But then we're working on a couple of extremely exciting stuff,
Yeah.
and that's to do
Again,
with.
the framework, I think I want to go back to what you said at the start, because you talked about the capital markets. So when I moved from custody into where I always dabbled in securities lending, and then I moved full time into securities lending, my custody colleagues were saying, "You are mad. It's such a narrow field. You're going to lose touch with what's happening in the market." And I went, "No, you're the ones that are crazy, because the whole securities finance and the mobilization of assets and the collateralization and all of that, and everything from IPO through to secondary market trading, that's all about the finance market. You're actually in the narrow bit where you're just servicing assets. This is the piece that actually hits every market and keeps the market turning over." So I was interested when you talked about it. You're saying you want to be really the full sort of capital markets fintech firm. So when you're talking about the ideas and the products that you're going through, I'm interested of it in that context, because I think you've hit the nail on the head with it.
Listen, it's funny that you and I are so enthusiastic about securities finance, and when people say this is so boring, but I love it. Call me a geek, but I think it's truly fascinating. And I think that the beauty about that is that it's such a basic, and you can squeeze the orange harder by, lending it out, getting it as a collateral, getting a loan against it. There's so many ways, ins and outs, that the big, what I call the professional players have done it, perfected it for years. And you can see there was no, if you see through different times, no big blow ups as a whole, right? There are hiccups, there were issues that got fixed throughout the years, but relatively it's stable. And I always say, always look at what the big ones do and not what the big ones say. And if you look at the big ones, most of them have been doing securities finance for decades on end, because they understand that security, it's a really recurring, stable revenue base. Even if it's not a huge revenue base, at times it mitigates the volatility in it, and you want it in. And then you look at the other side and say, but there's about $50 trillion worth of assets that don't have access to the market. And then the easiest is not inventing anything, but just democratizing it, enabling access. But through technology, now you start thinking, okay, so what actually am I doing in securities lending? I have an asset. I'm giving you that asset. You're renting it, and you give me a collateral in return, and you're paying me rent for it. But then let's flip it, right? If it's all technology based and everything, and I can, and let's think about it. If you're giving me, let's flip it now. Now let's say you're giving me the assets, and I'm giving you a loan against it. And that loan is, be it collateralized or whatever you want to call it, or however you collateralize it, that's another point. It's just flipping sides. Let's take it another step. You're giving me a cash, and I'm giving you a security, or you're giving me a stock, and I'm giving you a digital asset. And so it's all the same thing. It's like the Holy Trinity, right? If you think about cash, security, stocks, bonds, and ETF, and digital assets, be it cryptocurrencies or NFTs or likes, it doesn't really matter. Everything goes within that flow. And everything is to do what I like to call collateralized asset-based lending. And so in our vision, the Sharegain vision, we start here, but at the end of the day, it will all be connected in some shape or form. And then all of these new financial institutions that are coming to play today would need something that gives them an engine that does everything in the back for them, right? I wouldn't want to open like every financial institution having 3 desks: repo desk, a margin lending desk, a securities lending desk, a crypto lending desk, all of these things. It doesn't make any sense. If you have an engine that does everything for you, all of these things, and optimizes all of these different asset-based lending transactions, it becomes extremely efficient, and it's a big business.
Yeah, an interesting point there, which I'd like to get your thoughts on. But the truth is, sometimes it's easier to be a new entrant into a business than a legacy provider trying to upgrade their services. Do you have any thoughts on that?
It's all about the DNA, right? We had the privilege of starting from a blank canvas and really trying to challenge all the status quo that we thought that we know, right? I remember when I started really interviewing people for engineering roles in the UK. And it's an interesting story. I interviewed a guy in a bank, a very well respected tier one prime broker. And he said, and I told him the vision, he said, "Oh, no, you can't do that." And I told him why. No, no, and then he said, "Oh, you can't do this, you can't do that." And it got me interested. And we started really peeling off the onion. And then when you really, really, after 20 minutes of talking and really a very nice conversation, though, you understand that he doesn't really know why. He was told by compliance, risk, or credit that, oh, you can't do that and you can't do that many times, club it on his head. So then is already, that's it, like Pavlovian dogs. You can't do that. You just can't. So they're constrained by past perceptions. So thinking outside, it's not about them saying thinking outside the box. They don't know what the box borders are even. So you need really to challenge the status quo, to think about it more holistically. You need people that are unencumbered by experience, by past experience. And I find that the right mix is having people with a lot of experience and people that challenge that all the time. So the mix, I think that the key is the mix. So that's why we decided we're doing an R&D center in Israel, where securities lending, most people didn't even know what it is, but extremely good engineers that by DNA challenge everything, the status quo, right? Like Israelis always challenge everything, very vociferous, very deliberately trying to change anything and doing everything. That's by nature. In London, you've got a lot of extremely experienced capital markets people that know securities lending, knows the ins and outs. You marry those two, and it's not easy, but if the marriage succeeds, it's a beautiful thing, right?
Right. Okay. So look, that's great. So I want to turn a little bit to your investor for the last sort of segment here. I want to talk to you when you were talking about it at the start, when you were looking at potential investors to approach. What were you looking for? What did you end up finding, and why partner up with your investor here? So maybe take us through that sort of thought process.
So I think we didn't have a lot of must-haves, but we thought of it to ourselves, if we're building the framework of this Series B, and what is a great partner for Sharegain? Because we think about Sharegain now as Sharegain 3.0, right? What is the path? And what do we think the path is? And who is the best partner to take us from 3.0 to 4.0 to 5.0, right? And because not necessarily the one that was good from Sharegain 1.0 to 2 or 2.0 to 3.0 will be the right partner to continue. Different skill sets, different resources, experience, and so on. So we knew that we want a US based partner. We knew that we wanted someone who either has extreme knowledge in the space, capital markets, not just security, not necessarily securities finance, and or a lot of understanding in these kind of products like fintech, SaaS slash marketplaces, all of these things. So and at these stages, right? And so we compiled the list, and then we met quite a lot, narrowed down to about a dozen. And of that dozen, we were very fortunate at the end of the day to partner with Westcap. And I think the thing about Westcap that we love the most is that they're quite a new firm, 2018, but moreover, already running billions and billions. But moreover, they're more operators than just investors. They all come from an operating background. Lawrence Dorsey, LT, who founded Westcap, he was Merrill's and then CFO of Blackstone and then CFO of Airbnb. And I think, admittedly, that in Airbnb, he started seeing what does it mean to democratize. I always used to say that Sharegain is like the Airbnb for securities lending. And so he saw it how it all democratizes. I think so. It's a big theme with Westcap about democratizing financial services. And we've got Scott, who joins our board, who used to be the CEO of iPre that was sold to, I think, iJust Market, now S&P Global, back in 2018. So, and that's Capital Markets Fintech. And he started from scratch and got it to where it is right now. And what we loved with them is that they understood it, right? They understood the vision. They understood what it takes. And they wanted immediately to roll up their sleeve and get stuck with it. And I love that. I love enthusiasm. I love the fact that, and admittedly, we then had a choice to choose between two, and we chose them, and I'm very happy that we did. Yeah. And the journey looks very interesting, right? I think in these days, In this day and age, it's funny to say, money's become a bit more commoditized. So you really think about there's a lot of investors, and I think the key is finding the right one to partner with.
Great. Okay, so I guess maybe if we just move on to a bit of a closing, what do the next maybe 2 years look like for Share, other than being on an airplane?
Yeah, listen, for me, it's a lot of airplane time, but COVID permitting. But moreover, I think it's stealing is getting the company is scaling, right? So scaling is I always say it's a different skill set, right? If you're going to the gym and you're working on it with a new thing on a new routine, you wake up and say it hurts in places you didn't even know that it can hurt, right? Exist. It's just a new skill set, and you're working on totally new muscles, and so really, I think from a management point of view, the big challenge is getting the mindset right, and for everybody. And I think it's a lot about focus and then execution in bigger scales. And so getting that thing massive in terms of hiring and getting more. At the end of the day, we're really excited. A very strong funnel in terms of clients onboarding. Really, we're extremely excited how the future looks like. But the key for us really is focus and executing on our scaling plan.
Look, I think I wish you obviously a lot of luck on that. The other thing that we haven't really talked about is, and this is just my observation, one of the reasons that I like people to come in and challenge the market is it makes it better. If you start getting business that other people can't get, they have two choices. They can either try to find a way to compete with you or just let you occupy that space. But any way you look at it, servicing a new part of the investment community is to me a great result, whether it's you or whether it's someone else. This is to me about making it a much more pervasive business. I come from a time in securities lending when people had never really even heard about it. And now I have on my YouTube channel people saying, my broker is broker X, and they won't pay me anything when they lend my stock out. And what do you think I should do? And it's like going from where no one understood it or had even heard of it to where a retail investor on a YouTube channel is asking questions about whether they get paid for their assets. To me is I love that. That to me, that's where the world is going. So
100%.
congratulations and thanks for pushing the envelope, really. I had my own questions in the early days when you guys launched. I thought, will you be able to break through the grounds of I've been selling securities lending for 30 years to institutions, trying to get them to do it. And we still have such a tiny proportion of the market involved in this business that anything that makes it easier for investors and firms and banks to participate, to me, is a good thing, because I think it all comes down to making markets better. So I'll leave you to make any kind of last comments you want, and then we'll wrap it up. So closing thoughts from you, Boaz.
Oh, listen, Roy, thanks. I always enjoy. Thanks for taking the time to to talk with me. I always enjoy our conversations. At the end of the day, I think you've wrapped it up beautifully, right? It's all about democratizing. Whether we lead the way, we think of ourselves like a trailblazers, but at the end of the day, there's so much to do there. There's so much to do. And as I said, we're just getting started, right? Once you bring it at top of mind, and then I think timing is now. The market has come to securities lending. For securities lending was always years about pushing. Now the market is yanking us towards it, saying, okay, I need securities lending. I need to do this. I need to do that. A lot of things have happened the last 2-3 years. A lot of fall into the right place that now I hear from a lot of clients that are coming to us or prospects and saying, I've been tasked to launch a securities lending solution by the end of this year. You've never heard these things before. It's all about us coming in saying, you have to, because this is why it's good for you. And now people are coming to us and say, I've been tasked to do securities, and we heard that you guys are the best. And obviously it's very flattering, but at the end of the day, I concentrate on the former part of that thing. I was tasked by my board to launch a securities lending solution by the end of the year. That is my mind. The whole thing is changing, and I love being on that.
Listen, I think the best wishes on that. I think I've talked about it. I wish you all the best in that. So anyway, Boaz, thanks very much. For listeners or viewers, I'll be back in a minute with a wrap up of this session. So Boaz, thanks very much for your time, and best of luck.
Thank you.
Wow. I'm pretty sure you could hear the enthusiasm in my voice. It sounds like there are some pretty big goals and objectives for the Sharegain team. Securities lending as a service is something that I've been working on in the background myself. So it was pretty fascinating to see how they approached the challenges presented when really trying to create as close to a turnkey product or service as possible. I found it equally interesting to listen to Boaz describe the evolution of the business into what he uh, termed ShareGain 3.0, and makes me wonder, what is ShareGain 4.0 going to be? Now, look, as enthusiastic as I am, I want to make it clear that this is not an ad for ShareGain. I've had all kinds of fantastic guests on the show. I've done more than 30 of them now. And, obviously I select the guests because I think that they'll be interesting. It's not really an endorsement of any kind as such. As I said in the intro, the structure of the business for participation has been pretty much the same for a considerable period of time. And look, share gain is changing, right? They're changing that paradigm. And change is good. And frankly, I don't care whether it comes from market leaders, new entrants, or those firms in between that turn evolution into revolution. After all, evolution can take a very, very long time. So bring on the change. As you may have heard me say elsewhere, I believe that securities finance is really a critical part of the ecosystem of developed, emerging, and frontier markets, really everywhere around the world. And if it isn't there yet, then we need to make it accessible to those markets. And that's my ambition, is to help drive that agenda. I'm all on board with firms looking to make it a better market, make it more accessible, and ShareGain is one of those firms. This reminds me, I'll repeat a phrase that I heard in my interview with the Blue Fire AI team, and I loved it. They described it as, "We are in the business of inventing new." I love that. I think it applies to ShareGain as well as the great people at Blue Fire. And look, if you haven't listened to the Blue Fire podcast or videocast, I'll include links to the show notes. And there's some material for ShareGain as well that I'll include in there. So, is there a firm out there that you think I should interview that's changing the face of the business, that's having an impact? As always, we encourage you to share topics or guests that you'd like to hear from. So, drop me a line at roy@pierpoint.info. You can leave comments in the video, and of course, we'll respond. We provide lots of free securities finance content. The biggest single place for it, I suppose, is our YouTube channel. So I'll put a link into that. But of course, we have our website, www.pierpoint.info. We're always active on LinkedIn and Facebook, as well as Pierpoint Financial Consulting, which is the name that we use there, and Pierpoint FC on Instagram and Twitter and just about everywhere else. I'm Roy Zimmerhansl. I'm your host. This has been Pierpoint Perspectives, the art of securities finance, and I look forward to catching you next time.